What would you cite as the most important reason for your early success with small amounts of capital? And given hindsight today, what might you have done to improve your strategy with these small funds?
Yeah, well, I had a great teacher. I had exceptional focus, and I had the right sort of emotional qualities that would help me in being an investor. I enjoyed the game. I mean, if you do give it all back in the end, and it wouldn't make any difference if I did it. That was not the key thing. The game was enormously fun, and I think Gene McCarthy said about football one time, that it's just about, hard enough to be interesting, but not so hard as to be beyond the capabilities of people understanding it. And that's kind of the way this game is. I mean, it's not like Henry Singleton kind of questions he took on. It's actually a pretty easy game, and it does require a certain emotional stability. And I went at it, hammer and tong. I went through the manuals and everything, but I was enjoying when I did it. And like I say, I started out between ages 7 and about 19. I had that same enthusiasm, but I didn't really have any guiding principle. And then I ran into The Intelligent Investor and Ben Graham, and then at that point I was able to take all this energy and everything, and enthusiasm for it, and now I had a philosophy that made a lot of sense, total sense, and I found that I could employ, and so the game became even more fun. But it wasn't really more complicated than that. Charlie?
Well, I don't have anything to add. I do think that it's an easy game if somebody has the temperament for it and keeps at it because he likes it and is interested in it. I have a problem that Warren has less of. I don't like being too much an example to people who want to get rich by being shrewd and buying and passively holding securities. I don't think that's enough of a life. If you wrest a fortune from life by being shrewder than other people and buying little pieces of paper, I don't think that's an adequate contribution in exchange for what you're taking. So I like it when you're investing money for an endowment or a pension fund or your relatives or something, but I never considered it enough of a life to merely be shrewd in picking stocks and passively holding them.
Yeah, running Berkshire has been far, far more fun than running, in my case, Buffett Partnership or just an investment fund. I mean,
you'd be less of a man if you'd run that partnership.
It'd be a crazy way to go through life.
Yeah.
I mean, it just, Berkshire is incredibly more satisfying.
So if you're good at just investing your own money, I hope you'll morph into doing something more.
What was your most memorable failure, and how did you deal with it? Thank you.
Yeah. Well, we've discussed Dexter many times in the annual report, where I, back in the mid-1990s, I looked at a shoe business in Dexter, Maine, and decided to pay $400 or so million for something that was destined to go to zero in a few years, and I didn't figure that out. And then on top of that, I gave the purchase price in stock, and I guess that stock could be worth me, I don't know, maybe 6 or 7 billion now. It makes me feel better when the stock goes down because the stupidity gets reduced. Nobody misled me on that in any way. I just looked at it and came up with the wrong answer. But I would say almost any time we've issued shares, it's been a mistake. Wouldn't you say that, Charlie?
Of course.
Yeah.
We don't do it much anymore.
No. We probably could have pushed harder, particularly in the earlier years. We've always been, well, we've had all of our own net worth in the company. We've had all our family's net worth, and we've had all these friends that came out of our partnership, many of whom put half or more of their net worth with us. And so we've been very, very, very cautious in what we've done. And there probably were times when we could have stretched a little and pulled off something quite large that we made a mistake looking back. But I wouldn't want to take a 1% chance, of wiping out my Aunt Katie's net worth or something. It's just not something in life that I could live with. So I would rather be, 100 times too cautious than 1% too incautious, and that will continue as long as I'm around. But people looking at our past would say that we missed some big opportunities that we understood and could have swung if we'd wanted to go out and borrow more money. Charlie?
Well, it's obviously true. If we had used the leverage that a lot of successful operators did, Berkshire would be a lot bigger.
A lot bigger.
A lot bigger. But we would have been sweating at night. It's crazy to sweat at night.
Over financial things.
Over financial things, yes.
I'm Michael Monahan from Long Island, New York. Warren, Charlie, the higher education system has expanded, covering almost everyone who would like to receive a college education. This demand has translated into rising college costs. As a high school junior, I'm looking at prestigious institutions such as UPenn, Villanova, NYU, Fordham, and Boston University. On the other hand, my parents are experiencing sticker shock. All of these schools have a sticker price of over $60,000, with some students, as shown in a BusinessInsider.com article, can pay over $70,000, as the case at NYU. How will the average American family be able to pay this in the future? And more importantly, how do you two feel about this?
Charlie?
Well, the average American family does it by going to less expensive places and getting massive subsidies from the expensive places. If we had to give our college education to only people who could write cash checks for $60,000 or $70,000 a year, we wouldn't have that many college students. So most people are paying less or getting subsidies, but I think it is a big problem that education has just kept raising the price, raising the price, raising the price. And they say, but college-educated people do better. It's a big bargain. But maybe they do better because they were better to start with before they ever went to college.
Yeah.
And they never tell you that.
It's a ridiculous argument.
And so
I think that's one of the silliest statistics that they publish. I mean, to say that a college education is worth X because people that go to college earn this much more than the ones that don't. You're talking about two different universes, and to attribute the entire difference to the one variable that they went to college as opposed to the difference between the people who want to go to college and have the ability to get into college.
It's completely nutty, and about 70% of the people believe in it. So it gives you a certain hesitation about relying on your fellow man. So I think most people just have to struggle through with the system the way it is. There's a big tendency to have prices rise to what can be collected. And people just rationalize that the service is worth it. And I think a lot of that has happened in education. And of course, a lot is taught in higher education that isn't very useful to the people who are learning it. And of course, all those people would never learn much from anything. So it's really wasting your time. And that's just the way it works. So I think there's a lot wrong. What I noticed that was very interesting is that when the Great Recession came, every successful university in America was horribly overstaffed, and they all behaved just like 3G. They all, with a shortage of money, laid off a lot of people. And the net result is they all worked better when it was all over with the people gone. And so this right-sizing is not all bad. I don't think there's a college in America that wants to go back to its old habits. But you put your finger on it, it is a real problem to look at those sticker shocks. It's like any other problem in life. You have to figure out your best option and just live with it. We can't change Villanova or Fordham. They're going to do what they're going to do. And as long as it works, they'll keep raising the prices.
And it'll keep working.
Yes. And that's pretty much the way the system works. When it really gets awful, there's finally a rebellion. In my place in Los Angeles, the little traffic accident cost too much to everybody because of so much fraud in the chiropractors and some of the plaintiffs' attorneys and so on. And finally, the little accidents were costing so much that they worried about the guy who lived in a tough neighborhood couldn't afford to drive out of it to get a job. And the auto insurance companies thought, my God, if the price is going up like this, they'll have legislation creating state auto insurance or something. So the net result is they put the plaintiffs' attorneys to trial in every case. And that fixed it. And maybe something like that will happen in higher education. But without some big incentive, I think higher education will just keep raising the prices.
This question comes from Simone Wallace in New York. And she writes, over the last 50 years, we Berkshire shareholders have effectively been long sugar consumption through directly owned companies such as See's Candies, Dairy Queen, in funding Heinz, and in publicly traded investments such as Coca-Cola today. Yet from improvements in scientific research, we as a society have become increasingly attuned to the true costs of greater sugar consumption in the form of rising healthcare costs. We are seeing this awareness of sugar's impact in changing consumer behavior. Carbonated soft drink volumes are declining, and consumer packaged good companies focused on the center aisles of supermarkets are struggling with organic growth. Have we reached an inflection point in human behavior in how consumers view sugar consumption? And do you think Coca-Cola's moat, and potentially that of Heinz or Kraft's, is narrowing? And if not, what news would it take you to be convinced that it is?
Well, I think it's an enormously wide moat, but I think it's also true that the trends you described are happening. But there will be 1.9 billion 8-ounce servings of Coca-Cola products, not Coca-Cola, but Coca-Cola products consumed in the world today. And I don't think you're going to see anything revolutionary, and I think you will see all food and beverage companies adjust to the expressed preferences of the consumers as they go along. No company ever does well ignoring its consumers, but there will be, I would predict 20 years from now, there will be more people, there will be more Coca-Cola cases consumed than there are now by some margin. Back in the late 1930s, Fortune ran an article saying that the growth of Coca-Cola was all over, and when we bought our Coca-Cola stock in 1988, people were not that enthused about growth possibilities for the product. I sit here as somebody who, in the last 30 years, 1/4 of all the calories I've consumed come from Coca-Cola. And that is not an exaggeration. I am 1/4 Coca-Cola. I'm not sure which quarter, but if you really, I don't think there is this choice. I think there's a lot to be said about being happy with what you're doing. If I'd been eating broccoli and Brussels sprouts and all that all my life, I don't think I'd live as long. Every meal I would approach thinking, it's like going to jail or something. And no, I think, Charlie? Charlie's 91, and his habits aren't that different than mine. They're slightly better. But
there's no question about it. The way I look at it is, sugar is an enormously helpful substance. It prevents premature softening of the arteries. And the way I look at it is that if I die a little sooner, that'll just be avoiding a few months of drooling in a nursing home.
Charlie and I have enjoyed every meal we've ever had virtually, except when I was eating at my grandfather's, and he made me eat those damn green vegetables. But there obviously are some shifts in preferences, although it's remarkable how durable items are in this field. Berkshire Hathaway, I believe, was the largest shareholder of General Foods from about 1981 or thereabouts to about 1984 when it was bought by Philip Morris. And that's 30 plus years ago, and those same brands, they went through Philip Morris, they got spun out as Kraft, they broke Kraft into two pieces, but now we're going to own those brands, and they're terrific brands. But, Heinz goes back to 1869. The ketchup came out a little later. They went bankrupt actually when they were counting on horseradish or whatever it was. But the ketchup came out in the 1870s, and Coca-Cola dates to 1886. And it's a pretty good bet that an awful lot of people are going to like the same thing. And when I compare drinking Coca-Cola, to something that somebody would sell me at Whole Foods, I don't know. I don't see smiles on the faces of people at Whole Foods.